Welcome to the Motley Fool's Crunch Time series, where we scout out a single company from their story to their opportunities and risk. I will start with my prediction. I believe Rocket Lab will outperform the market over the next 5 years. Let's jump in. Rocket Lab's core mission is to provide end-to-end space services. They started by building small rockets named Electron to launch satellites into orbits for both commercial operators and government agencies. By operating their own launch sites and manufacturing most of their rocket components in-house, Rocket Lab earns revenue from launching payloads swiftly and reliably. But the story doesn't end with rockets. Through their space systems division, they produce satellite components, design entire spacecrafts, and are even moving toward data-driven space application. This vertical integration means they can build, launch, and operate satellites under one roof. Next, let's look at opportunities. First, there's the surge in demand for small satellite constellations. Think internet connectivity, Earth imaging, and government surveillances. Rocket Lab's Electron rocket has a proven track record, fueling their momentum. Second, the defense sector is investing heavily in new technologies, from hypersonic testing to national security payloads, and Rocket Lab's specialized suborbital rocket variant HASTE could tap that market. Third is the diversification of Rocket Lab's space system. They don't just launch satellites, they assemble them and sell critical parts. Over time, this strategy could reduce the volatility, typically, of a pure-play launch company. Finally, the upcoming Neutron rocket offers an additional revenue stream if it delivers on cost and performance, capturing a slice of mega constellation launches. Now, there is risk. This is still rocket science, which is anything but simple. Hard technology can falter, and even minor delays can balloon into major costs. Neutron's development is capital extensive, and a significant funding gap could emerge if projects slip behind schedule. There's also fierce competition. SpaceX is the industry behemoth, launching bigger payloads at relatively low cost. If Rocket Lab can't bring Neutron online quickly, or if reusability proves trickier than planned, they might face a sharp drop in investor confidence. Additionally, revenue hinges partly on government contracts, which are subject to political shifts. Regulatory holdups or changes in administration focus can derail space budgets. And like many young aerospace firms, Rocket Lab isn't consistently profitable yet. Now, I am projecting around a 15% annualized return over the next 5 years, fueled mainly by Neutron's success commercially and steady demand for small launch missions. But buckle up, this stock is known for its wild swings. If Neutron hits significant snags, we might see a drop of 20% or more. If it excels and captures new contract, I wouldn't be surprised to see the stock skyrocket. Now, to recap, Rocket Lab's business model spans launch services and spacecraft manufacturing. Their growth potential rests on demand for mega constellations and defense-related projects. The biggest risks are high research and development costs, development timelines, and stiff competitions from big players. Now, I'm sticking to my forecast of roughly 15% annualized return by 2030, assuming they'll ride strong demand and keep execution hiccups under control. At the Motley Fool, your comments make us all smarter. Please comment with your own research and insight about Rocket Lab, and tell us what stock you want to see Crunch Time tackle next. Go to fool.com/invest to receive the top 10 best stocks to buy now.